Okay, good morning everyone. So in this lesson, we're going to talk about the expanded equation to show the operating activities. So before we will go into proceed with the lesson, let us define first the learning outcome of this lesson. So after discussing this lesson, you will be able to prepare the financial statements. So the success and failure of a business depend on its financial performance. So the information is provided by the income statements, which summarizes the operating activities of the business. And also, in this lesson, we are going to demonstrate the process of analyzing and measuring assets, liabilities, and owner's equity for revenues earned and expenses incurred by the business. So let us start. Accrual concept of recognizing revenues and expenses. So the accrual principle is used in recognizing the assets, the liabilities, the revenues, and expenses based on the period they relate. So the accrual concept is supported by the realization principle and expense recognition principle. So using the realization principle of revenue is recognized when it is earned, regardless of the collection. So, for example, for a service business, so revenue is recognized when service is rendered, while for a merchandising or the manufacturing business is concerned, it is earned when the merchandise or product is sold and delivered to the customer. And how about the expense recognition principle? So, expense is only recognized or when incurred, regardless of whether cash is paid or not. Okay, that's the difference between the realization of revenue principle and the recognition of expense principle. So, there are three ways of recognizing expenses in generating income. So the first one is expense is recognized when revenue is recognized. So expense is recognized when revenue is recognized because it is not possible to earn revenue without incurring expenses. So if you can remember from our previous lesson that this kind of principle is called the matching principles. Okay, so it is not possible to earn revenue without incurring expenses. So the second one is the depreciation expense over the years the asset will be used. So resources or assets that will benefit the business over a number of years should be allocated or spread out as a depreciation expenses over the years the asset will be used. Okay, and the third one is expenses that are regularly incurred. So there are expenses that are regularly incurred. So examples are the salaries for service received from employees, the rent for use of office space, or the utilities for telephone, the light and water services used. So measurement is needed for these expenses, which are computed based on consumption, of course, made by the business. Example, if it's a salary, such as number of days per workers. So for electricity, the numbers of kilowatt hours, and for water, it's like a number of metric tons. Okay, there's a specific measurement needed. Okay, so here you can see that this is the expanded structure of an accounting equation with the owner's equity affected by the four elements. So the contributions and the revenues on one hand is the increasing the owner's equity, okay, and the on the other hand, the withdrawals and the expenses, these are the factors that would decrease the owner's equity. So the assets and liabilities will also change along the process. So again, the fundamental identity of balance among elements should be assets equals to liabilities less the owner's equity. So contributions and revenues could lead to high owner's equity, while the withdrawals and expenses could lead to decreasing of owner's equity. So what is an income? So the income represents an inflow of cash or other assets coming from a client or customer for service rendered or for merchandise sold if you are doing a merchandising business. The definition of income encompasses revenues and gains. So revenue is income coming from the normal course of the business. So a gain is an income which may arise but not from its normal course of operation. So when revenue is recorded, class, and the assets will increase or the liabilities will decrease with a corresponding increase in the owner's equity. Again, so if the revenue is recorded, the assets will increase or the liabilities will decrease with a corresponding increase in owner's equity. So the account titles used to describe revenue common to all service providers is the service income or the professional income, and the sales. So the sales is the revenue title used by merchandisers and manufacturers. So in the Book of Philippine Accounting Standard 1 defines income as an increase in economic benefits during the period that results in increase in equity. So other than those resulting from contributions of equity participants, investors. So an increase in economic benefits may take the form of cash inflow or enhancement of assets or decrease in liabilities. Okay, again, an increase in economic benefits may take the form of cash inflow or enhancement of assets or decrease in liabilities. So let us going to illustrate the income. So I have here an example. One moment. So here, effects of revenue on assets and owner's equity. So assume that Dr. Paris treated a patient and received 300 cash. So what would happen to your accounting equation? So there would be an increase in asset by how much? Should be 300 pesos. So cash increase to 300. In this illustration, there will be no liabilities, and you will the owner's equity will also increase by 300. So the account title we will going to use here is the medical income. Okay, since Dr. Paris treated a patient, so there is a medical income amount to 300 pesos also. So what if there is no cash was collected when the patient was treated? Okay, so the revenue recognition or the realization principle prescribes the recognition of revenue as soon as service or merchandise has been delivered by the business. So it is not necessary, class, that cash can be immediately received from the customers for revenue to be recognized. Okay, so the asset will still increase, but instead of cash, the account affected is the accounts receivable. So instead of cash, we will going to place here accounts receivable, since we didn't receive the cash receivable. So amount to 300. So the account form was changed from cash to accounts receivable. So there will be an increase in asset, at the same time an increase in your owner's equity. So owner's equity, medical income, equals to 300 pesos. Okay, so this is the effect of revenue on assets, non-cash. Okay, so because you assume that there was no cash collected when the patient was treated. So accounts receivable will be 300 equals to medical income amount to 300. Okay, so let's proceed. Second one is the sorry. Expenses. So expenses represents the outflow of cash or the cost required for something. Okay, so the money spent on something. So in other words, expenses is the consumption of an asset or using up this service to generate revenue is called an expense. So an expense will decrease an asset or increase a liability with corresponding decrease in owner's equity. Okay, again, so an expense will decrease an asset or increase a liability with a corresponding decrease in your owner's equity. So examples of expenses are in the company: telephone expenses, light expense, salaries expenses. So according to the Philippine Accounting Standard number 1, so it defines expenses as a decrease in economic benefits during the accounting period that results in a decrease in equity. So other than those relating to distributions to equity participants in the form of personal drawings made by the owner. So decrease in the economic benefit may be in the form of outflow of cash or depletion of asset or increase in liability. So let us illustrate the expense. So here, so effect of expenses on assets and owner's equity. So assume that Dr. Perez paid cash of 5,000 pesos for the salary of the nurses. So what would happen to your cash? So there will be a decrease in asset amount to 5,000 pesos. Okay, and at the same time, there will be a decrease also in your owner's equity with an account title salaries expense, since this is paid for the salary of nurses. So salary expense amount to 5,000 pesos. Okay, so this is the effect of the expense on asset and owner's equity. So if there is a decrease in asset, there will be also a decrease in your owner's equity. So expenses can be recognized when this occurs. That means service has been received. Okay, so regardless of whether cash was paid or not, so service here has been received. So if expense is unpaid, so following the accrual rule, a liability should be recognized. Okay, so if expense is unpaid, following the accrual rule, a liability should be recognized. Okay, so next one is the profit or loss. So the difference between the total income and the total expenses is your profit, net profit, or your net loss. So, uh, if income is greater than expenses, so the result is a profit. So, when the total amount of expenses incurred is greater than the total amount of revenues earned, it will be a net loss result. Okay, so if income is greater than expenses, the result is a profit. Moment, it should be the profit. And if the total amount of expenses incurred is greater than the total amount of the revenue earned, the result will be a net loss. So it will be revenues less your cost and expenses. It will lead you to your net income or the net loss. Okay, so let's have the demonstration problem. So let us use from our previous lesson, we are using the happy tour and travel, right? So our interim period there was ended by I think March 20. So using the balances of a happy tour and travel as of March 20 in the preceding module or the preceding lesson, so the following transaction occurred. So let's continue to March of 21. So a tourist hired the services of the agency for a tour in Baguio. So cash of 15,000 was received. So there will be an increase in asset amount to 15,000. Okay. There is no liabilities. And at the same time, there will be an increase in your owner's equity in the form of a service income. Okay. So 15,000. So increase analysis here is increase in cash by 15,000 with the corresponding increase in owner's equity for services rendered to the tourist. Okay, so increase in cash by 15 and increase also, where is it? By 15 in your owner's equity. Okay, so next one is in March 22, cash was paid for the following. So you pay for the gas and oil, amount to 500 pesos, and repair of a 1,000 pesos. So what would happen? So there would be a decrease in your asset. Okay, so how much would be decreased in cash? Should be 500 plus 1,000, be 1,500. And liabilities 0. At the same time, there will be a decrease also in your owner's equity by the account of repair expenses. Repair expenses amount to 1,000 pesos, and gas and oil expenses. Gas and oil expenses amount to 500 pesos. Okay, so the decrease in asset by cash, decrease in asset cash by 1,500 pesos with a corresponding decrease in owner's equity for the expenses incurred. Okay, so let us proceed. Okay, on March 24, Mr. Gray hired the services of the agency for his visitors and promised to pay 16,000 on March 31. Okay, take note. He promised to pay 16,000 on March 31. So there will be an increase in asset. So but he said here he will pay only on March 31. So what would be the account title or the form of the asset that we will going to use here? Okay, si Mr. Gray daw gi-hire niya ang atong happy travel and tours for his visitors niya. Promise siya to pay us on March 31. So instead of cash, we will going to place here accounts receivable since we still since he didn't pay in cash. So accounts receivable amount to 16,000 pesos. And if there is an increase in asset at the same time, there is an increase in owner's equity. So the account title is a service income rendered. How much also? 16,000 pesos. Okay, so there is an increase in asset accounts receivable by 16,000 with a corresponding increase in your owner's equity for the revenue earned. Okay. So take note of that one. He will pay you on March 31. Okay, on March 25, you pay a telephone bill for 500 pesos. Okay, so what will happen to your asset now? So there will be decrease in asset. So decrease in cash by 500 pesos. And will be at the same time a decrease in your owner's equity in the form of utilities expenses. Okay, 500 pesos. So there is a decrease in asset cash by 500 pesos with a corresponding decrease in owner's equity for your utility expense incurred. So the transactions for regular expenses are usually paid. So decrease in 500 pesos. At the same time, decrease in your owner's equity by 500 pesos in the form of your utilities expenses. Okay, so on March 27, the Faculty Club of Angelicum Academy hired the services of the agency for a tour in Manila. So a bill was issued to them for 20,000, 50% of which was collected. So, okay, let us. So the Faculty Club of Angelicum Academy hired the services of the agency for a tour in Manila. The bill was 20,000. So they pay you 50% of which was collected. So your accounting equation will be increased in cash by 10,000. Okay, and at the same time increase in your accounts receivable by 10,000 also. So there is no liabilities here. So it will be increase also in your owner's equity in the form of a service income. So amount to 20,000. Okay, so maski wala pa nimo siya collect, dapat nimo siyang i-recognize ang katong 50%. So that's why we separated. We make two forms of accounts here, the cash and the accounts receivable. Since nagbayad man siya nimo 50,000 50%, so that 50% will be in cash and the other 50% with the form of accounts receivable. So in owner's equity, it will be recognized as a service income amounting to 20,000 pesos. Okay, and on March 27, Mr. Gray paid one half of his account in cash. So, so 8,000 Mr. Gray. Okay, so here, so he paid the instead of March 31, Mr. Gray paid half of it on March 27. So there will be an increase in asset. It would be cash amount to 8,000 pesos. Your accounts receivable will be deducted since nagbayad naman siya sa katunga. So, di na gid siya full nga 16,000. If you can see here, di ba, ang atong gi-record is full 16,000 accounts receivable kay wala man siya nagbayad into cash. Now, on March 27, he paid half of his account in cash. So there will be an increase in cash account by 8,000 and a decrease in accounts receivable account amount to 8,000 also. So 8,000. Okay, so increase in asset cash by 8,000 with a corresponding decrease in another asset accounts receivable by 8,000. So, dili maapektuhan si liabilities, dili po maapektuhan nga rin si owner's equity because this is only the collection of your cash. Okay? And on March 31, you paid rental of office space by 10,000 pesos and salaries of employees and workers by 9,000 pesos. So there will be a decrease in cash. So amount to 10,000 plus 9,000 will be 19,000. And at the same time, a decrease also in your owner's equity in the form of the first one is rental of space, office space. So this would be rent expense amount to 10,000 and the salary expenses since you're going to pay your employees and workers amount to 9,000. So the account form we're going to use is salary expense. So 9,000. Okay, so there is a decrease in asset in cash amounting to 19,000 with a corresponding decrease in your owner's equity for the expenses incurred in the form of rent expense amount to 10,000 and salary expense amount to 9,000. Okay. So let's have a summary of the effects on the accounting values presented here in our table format. So the balances as of May 20, we're going to take it from our preceding lesson. So here, let me see, what's our balance last week? Where is it? So share balance here. Here, the cash is on March 20. The cash is 45,000. So here, March 20, cash is 45,000. We don't have accounts receivable. Then the cars is or the vehicle is 750,000. The equipment is 55,000. And the furniture and fixtures is 45,000. Okay. Do we have a loan payable? Yes, there is 100,000. Okay. And the capital of Gomez 795. Okay, so this is our investment. Okay, so on March, sorry, this would be 800,000. This is your investment. Then there is a 5,000 drawings. So you will take note of that one, 5,000 drawings. Okay, so on March 21, let's do this one. It's easy for us to see. Okay, on March 21, there will be an increase in cash amounting to 15,000. Okay, and then at the same time, an increase in your owner's equity in the form of service income by 15,000. So here, 15,000. This will be your service income. Okay. Now on March 22, there is a decrease in your cash by 1,500. 1,500. At the same time, a decrease in your owner's equity by 1,500 in the form of repair expenses and gas and oil expenses. So, ito siyang ibutang diri as 500. This one is your gas and oil expenses. And another 1,000 pesos as your repair expenses. Okay, so on March 24, there is an increase in your asset in the form of the accounts receivable. So March 24, accounts receivable, how much? 16,000 pesos. So at the same time, a corresponding increase also in your owner's equity, amount to 16,000 pesos. So this will be your service income. Okay. Next is March 25. You pay telephone bill for 500 pesos. So your cash will be decrease in 500 pesos. At the same time, decrease in your owner's equity, amount to 500 in the form of utilities expenses. Okay. Next one is on March 27, there is an increase in your asset by 10,000 in the form of cash and at the same time in the form of your accounts receivable. So March 27, 10,000 increase in cash and 10,000 also increase in accounts receivable. In your owner's equity will be increased in 20,000. Service income. Okay, on March 27 also, this is not March 27, it should be March 30. Okay, so let me change it into March 30. On March 30, there will be an increase in your cash by 8,000. At the same time, a decrease in your accounts receivable by 8,000. So March 30, increase in cash by 8,000 and decrease in accounts receivable by 8,000. Okay, lastly, in March 31, there is a decrease in asset by 19,000 since you pay for a rent for your office space and your salary expenses also by 9,000. So, we decrease in cash by 19,000, and decrease in your owner's equity by 19,000 also. So 10,000 for the rent expense. Okay. And 9,000 for your salaries expenses. Okay. So now let's make the total. So the total. So the total of your cash will be, okay, 45,000 plus 15,000 plus 15, oh sorry, 45,000 plus 15,000 minus 1,500 minus 500 plus 10,000 plus 8,000 and minus 19,000. So your total cash will be 57,000. Okay, so your accounts receivable, 16,000 plus 10,000 minus 8,000. So total of your accounts receivable is 18,000. Okay. Cars or the vehicles remain as it is, 750,000. Your equipment, 55,000, the same. Your furnitures, 45,000. Okay. Your loans payable, 100,000. And your owner's equity would be uh, initial investment, 800,000. Uh, Minus the drawings, 5,000. Plus the service income, 15,000. Minus the gas and oil expenses, 500. Minus the repair expenses, 1,000. Plus the service income, 16,000. Minus the utilities expenses, 500. Plus another service income amount of 20,000. Minus the rent expense, 10,000. And the salaries expense by 9,000. So your total owner's equity will be 825. Okay, so if we will going to make a financial position, it will be like this. So let's make a financial position. So happy tours and travel, and then statement of financial position. Okay, and then before, we use the ending balance as dated March 20. So here now our date will be March 31. So again, this kind of time period is still an interim period because it's only 1 month financial transactions. Okay, so if it is a year, it would be a calendar year period. If it starts with January 1st to December 31st, this is a calendar period. If it's a fiscal year period, should be start not January 1, maybe July 1 or June 1, and it will end in the next year. So from July 1 to June 30 next year. So this is a fiscal period. So if it's an interim period, it's a shorter one. So it may be form of a monthly, quarterly, or semi-annual. So we'll use the interim period. So here it's March 31, 2021. Okay. Before we use 2020. Okay. So your asset, then liabilities and owner's equity. Owner's equity. Okay. So start with your cash. So cash is 57,000. Okay. So now you have accounts receivable. Accounts receivable amount to 18,000. And then vehicles 750,000. What else? Equipment 55,000. Furnitures and fixtures. Furnitures and fixtures amount to 45,000 pesos. Oh, sorry. Fixtures 45. Okay. And this will be your total. Your liabilities, loans payable, 100,000. Your capital now, Gomez capital, it's 795. Okay. Uh, Income and expenses. So how much your income? Service income would be 15 plus 16, 31,000 plus 20, 51. Okay, 51. And your expenses is 500, 1,000 plus 500 plus 10,000 and 19,000. So your expenses is 21,000. Okay. So now total would be here. The total is 57 plus 18 plus 750 plus 55 and 45. So 925. Okay. And in your liabilities and owner's equity, 100 plus 795 plus 51 minus 21,000 as your expense. So 925. So it is equal. So your assets and liabilities and owner's equity is balanced. 925. Okay. So in PAS, the usual accounting period is 1 year. Okay, this provided by PAS 1. So it means that transactions undergo a 1 year accounting process before financial statements are prepared. However, interim period or interim financial statements, say the monthly or the quarterly, may also be prepared to track down the progress of the business. Okay, so the accounts in the statement of financial positions are the real values. Okay, while the income statement accounts are only temporary or nominal values. So once reported, these are transferred to the capital account at the end of a particular period. So the income statement reports revenues and expenses only for a certain period of time. So the capital statement reports changes in equity for a certain period of time. So the statement of financial position reports assets and liabilities at a point in time. Okay? So hopefully nakagets mo itong atong expanded form sa operating a business. So operating cycle. So this is the operation cycle of a service business. So from cash, uh, going to a service rendered on account, then go back as the account collected, then it will go back to form a cash. So the operating cycle represents the period of time it takes for cash to be um, converted to back into cash. So operating cycle defines it as the time between the acquisition of assets, their processing and realization in cash or cash equivalent. So it depends upon the type of operation. So na ay service business, na si merchandising business, na po si manufacturing business. So for service business, man siya from cash and service rendered on account to account collected and then go back to cash. So for merchandising business, so from cash, merchandise purchase to merchandise sold on account to account collected and go back again to cash. So this information is relevant in classifying assets and liabilities of the entity into the current and non-current and also in the planning functions of the management. So the operating cycle for a travel agency may take 3 months, while that of a wine manufacturer may take more than a year. Okay, so the manufacturing business here, from cash to raw materials processed to finished goods to account collected and go back to cash. Okay, so let's proceed to the classifications of assets and liabilities. So, mo yung mga pangutan before sa atong preceding lesson. So, what are the classifications of the assets and the liabilities? So, for assets, there will be two, the current assets and the non-current assets. So, current assets, includes the cash and cash equivalent, which are not restricted in use, as well as other assets expected to be realized into cash or sold or consumed within the normal operating cycle of the business or 1 year, whenever whichever is longer. So this includes sa current assets, si cash, either on cash on hand or cash in bank, marketable securities, accounts receivables, notes receivable, inventories, for merchandise or business type or a manufacturing business type, atong inventories, as in prepaid expenses, which are the supplies, or insurances, the rent. So these are classified as a current asset. So how about the non-current assets? So these are in the form of your PPE. So PPE stands for plant, property, and equipment. So if you have building, if you have land, if you have machineries, if you have equipment, so it will belong to non-current assets. So for liabilities, they have two also, the current liabilities, the non-current liabilities. So the current liabilities are those debts or obligations reasonably expected to be liquidated in the normal course of the enterprise's operating cycle or paid within a period of 1 year by use of your current assets or the creations of the other current liabilities. Examples and current liabilities are your accounts payable, notes payable, salaries payable, taxes payable. So this belongs to your current liabilities. And the non-current liabilities, these are a long-term. See, current is a short-term liabilities, while non-current is a long-term liabilities or obligation which are payable longer than 1 year. So examples, si mortgage payable, si bonds payable. So these are just an examples of non-current liabilities. Okay, so that would be it all for our lesson 2.2 about the expanding equation of operating activities. So if you have any questions, class, you can reach me through our group chat, or you can email me in my VSU email. And on Wednesday, so we're not going to meet. Instead, I will just going to post this recorded discussion in our VSUEE. Okay, so I will, I know, yeah, on Wednesday and on Friday. So from that period, 7 to 10, I will be open. So if you have any queries, clarifications, questions, I can entertain you in that time for my Wednesday 7 to 10 and for my Friday 7 to 10. So you can just enter the room. We can do one-on-one talk with you. Okay, so that would be all for equation expanded to show operating activities, and have a good day. Thank you.